Hey, what's up guys? It's Jonathan here. So in the investment world, there's a common debate between which investment is better, stocks or real estate. Each investment has its own strengths and weaknesses that may make one better than the other depending on the situation. Given that I control over $600,000 of assets between stocks and real estate, I have a very good understanding of how both asset classes work. So in this video, I'll compare stocks versus real estate in 8 different categories. So I hope this video gives you clarity on both asset classes and helps you make an informed decision. So let's hit the like button for the YouTube algorithm and get right into the video. So the first category we're going to discuss is the work involved in the two different investments. It could take a lot of work and a lot of patience and time to find a good deal in real estate. You have to write the offers on multiple properties. A lot of times your offers won't be accepted. You also will have to go through the escrow process, which could take anywhere from 20 days all the way up to a couple months, depending on the deal. Then once you have ownership of the property, if you decide to buy and hold real estate, you would have to also manage the property as well, which can require some work as well. Even though it's popular belief that real estate is a very passive investment, there is still some work that has to be done for it to be a profitable investment. Stocks, on the other hand, don't take up as much time compared to real estate. It's easier to research stocks and to learn about the stock market than it is to learn about real estate investing. Purchasing a stock doesn't require as much paperwork or as much time as buying real estate. Nowadays, this really doesn't matter of pulling up your phone, downloading the app, signing up for an account, and depositing money, and you're good to go. So the second category we're going to look at is barrier of entry. So real estate has a much higher barrier of entry compared to stocks. So you need 3 things to be able to buy real estate. You need money for your down payment, and also if you're buying an investment property, reserves as well. You need to have good credit, and you also need income. You also need a source of income as well. And also with real estate investing, you need a decent amount of knowledge to be able to be a successful real estate investor. With stocks, on the other hand, there's only one barrier of entry, which is money. And usually you need a lot less money to buy stocks than you would real estate. Also, you don't need as much knowledge to be a successful investor in the stock market compared to the real estate market. The third factor we're going to look at is liquidity. So stocks are very easy to liquidate. It's just a matter of going onto your brokerage platform and simply just selling your share, which can be executed almost immediately. Real estate, on the other hand, if you wanted to liquidate real estate, you have a couple options. You could sell, which tends to take at a minimum usually about a month. It could take even longer depending on your market and the property that you're trying to sell. And also you'd have to get multiple different parties involved to be able to liquidate your real estate. So it could be even more time consuming given that you have to hope that everything works perfectly. Another way you could liquidate real estate is by taking out a loan against your real estate. But typically, if you're to take out a loan on real estate, whether it's a home equity line of credit or refinancing a property, it still takes a couple weeks for the loan to close. So it's not as fast as stocks. The fourth factor is diversification. In stocks, there's a variety of different stocks you could buy. You could buy growth stocks, you could buy dividend stocks, which pay you a certain amount of money every month. You could buy bonds that are less risky but have a lower returns than stocks do. Or you can even buy index funds, which allow you to buy funds that represent a certain sector of the market. Similar to stocks, real estate, there's multiple different types of real estate properties you could buy. You could buy residential real estate like houses and condos. You could buy commercial real estate like apartment buildings, office spaces, malls, etc. You can also buy industrial real estate like warehouses and factories as well. The problem with real estate is that it becomes a little bit harder to diversify, especially if you don't have a lot of money, because it takes a lot of money to get real estate deal done compared to stocks. Stocks are a little bit more easier for that common person to diversify. The fifth factor we're going to look at is control of investment. So with stocks, you have control over what stocks you pick, what companies and what index funds and where you place your money, but you don't have control of those actual companies themselves. You're not running those companies. You just simply own a certain amount of shares of the company. Whereas with real estate, you control almost every part of your investment. When you buy a real estate property, you control how the property gets fixed up, to what condition it gets fixed up, to what you want to rent the property out for, to who you want to rent the property out for, so on, so on, and so on. And because of all that control you have with real estate, it makes it a lot easier for you to use real estate to get to whatever your investment goals are. You're not at the mercy of a CEO or some outside party. It's really you that's calling the shots in real estate. The sixth factor we're going to look at is tax advantages. So with stocks, the big tax advantage you get is the capital gains tax rate, which is where if you buy a stock and you hold it for longer than a year, you could pay less taxes than compared to if you had sold it within the same year that you bought the stocks. With real estate, on the other hand, it has a whole plethora of different tax benefits, as well as the capital gains tax. With real estate, you can also do something called a 1031 exchange, where when you have an investment property and you sell it and you go buy another investment property, you don't pay taxes on capital gains from that first investment property. Also, another very popular tax deduction in real estate is depreciation. So if you rent out a property, you can depreciate the value of the property over 27 and a half years if it's residential, and I believe 39 years if it's commercial. Factor number 7 is the ability to leverage your investment. So with stocks, you can leverage your investments using margin. Margin is basically a loan against the value of your stocks. The problem with margins is the risk of margin calls. So pretty much if your stocks, so depending on your brokerage, if your stocks fall below a certain value, your brokerage can call a margin call on you, which is basically where they'll give you 2 or 3 days to pay off either some or all of the outstanding margin that you have if your stocks go down in value. And this could be very risky because it could force you to sell when you're already down on a certain position, causing you to lose a lot of money. With real estate, there's multiple different ways you can leverage your investment. One of the ways is through the use of a mortgage. The nice thing about mortgages is that they don't, unlike margin, they don't have loan call provisions. So even if your real estate was to drop by like 50%, like overnight, the bank can't call you up and tell you that you have to pay your loan. They have to continue to allow you to pay your loan according to the terms of your mortgage. And another way you can leverage your investment is through the use of what's called a home equity line of credit, or what's commonly referred to as a HELOC. HELOCs, like margin, can be frozen if there is a downturn in the market. But they do not, unlike margin, they don't have a call provision. So if you go and you withdraw all the money from your HELOC, the bank can't call you up and tell you to pay all that money in full because the market is down. But if there is an unused balance in your HELOC and the market was to go down, they can freeze your HELOC. So it's definitely a lot better than margin. The 8th factor we're going to look at is volatility. Stocks tend to have extreme swings in the short term, but these swings tend to balance out to gradual growth over the long run. This makes stocks somewhat harder to value in the short term, but a lot easier to value in the long term. Real estate, on the other hand, tends to move a lot slower than stocks do. And the gains in real estate tend not to be as explosive, but they tend to be more consistent. This makes real estate a really good investment for not only the long term, but also the short term as well. So to give you some examples of returns with both stocks and real estate. So with stocks, there's 2 different types of returns that you get. Appreciation of the stocks, when the value of the stock goes up. And you also get dividends, where the stock may pay you a certain amount of money just for holding shares of the stock. The S&P 500 has an average annual return of about 8% with dividends reinvested, not accounting for inflation. Real estate has 4 different types of returns. It has appreciation, cash flow, principal pay down, and tax benefits depending on your situation. When you factor in all 4 factors, plus the fact that you're getting a leverage return because most likely you buy an investment property with a loan, so it's actually not the return on the entire amount of the property, but the return on the amount that you put down on the property. Real estate can have significantly higher returns than stocks can. To give you a rundown on how I invest I like to use a combination of both stocks and real estate in my portfolio. Ideally, in a perfect world, I would like to have some kind of balance of stocks and real estate. But right now, because I'm in a position where I'm trying to build my net worth very quickly, I'm actually getting my extra money, putting it into stocks. And then once I have enough money for a down payment on an investment property, I now use that money to go buy an investment property. So I'm not staying in stocks very much for now, but at some point I do plan to shift more of my portfolio to stocks in the future. So stocks and real estate are two very great investments to park your money into for the long term. The decision on which one you will use or how much of one you'll use versus the other will all depend on how much work do you want to put into your investment, how much time do you want to put in, how much money do you have to invest, and how big of a return that you want. So I'd like to thank you for watching. If you enjoyed this video, please hit the like button for the YouTube algorithm. It greatly helps out the channel. Also, hit the subscribe button and notification bell so you get notified anytime I post a new video. If you have any questions or comments on stocks or real estate, I'll be more than happy to answer them. Just leave them in the comment section down below. I respond to every comment, so I highly encourage you to leave any questions or any comments you might have. Check out the link for Webull where you can get one free stock valued up to $1,600 if you deposit $100. Also, follow me on Instagram, TikTok, and Twitter. I try to post there almost every day. And thank you for watching. Until next time.